market goes up, you go up. When the market goes down, you don't go down. Safe Money Radio, your money safe and sound.
Well, hello, everyone. Whether you're listening to us on Safe Money Radio or you're watching online or on YouTube, we're back again with my good friend and mentor, Ed Slott, America's IRA expert. Ed, thank you so much for being with us today.
Great to be back with you. We're here live in Kansas City.
We are, which it's pretty amazing, honestly. If you think back to when we were together like this the last time.
In Denver,
Colorado, March the 3rd and 4th of 2020, and we had no idea that right after our interview, the world was going to come to a screeching halt.
I mean, we had a great event, and all of a sudden I get on the plane, and then I'm home, and then I'm home.
Yeah.
I'm staying there.
And how long was it before you traveled again after that?
Like at least a year and a half.
Yeah. And so we tried to, have our Ed Slott Master Elite IRA Advisor group here a year ago, and we booked it, and we thought we were finally going to be back together again, and still COVID issues, and we didn't.
Well, it was meant to be. We're here now.
Here we are, and we're ready to roll. So for those of you, again, if you're listening on Safe Money Radio, I've been hosting Safe Money Radio every single week on 2 different stations 5 times a week since 2010. And I've been talking about Ed since 2010. That's when I joined the Ed Slott training group. And so grateful to have you. I mean, you've been on the radio with us a lot. We've done a lot of in-person interviews, but what I'd like to do is let's go back in time for a minute to 2020.
Okay.
Because when we met, President Trump had just signed into law the Secure Act.
Right.
And
a few months before that. Right.
Right. And we were talking about how all that had taken place, and we're going through all that. And wow, a lot of things have changed since then.
Oh, yeah. We're still finding out what the Secure Act means. You're going to find out at this meeting. We're here at our workshop that Congress is confused, IRS is confused, everybody's sprouting rules. Meanwhile, people's retirement savings hang in the balance on how these rules will apply. So they need advisors like you that are staying up to date, that have this, going to programs like this, that getting specialized knowledge. You can help your clients navigate these rules that their retirement accounts, their IRAs, 401ks depend on.
Absolutely, Ed. My son Hunter joined the group this year, and I've had a lot of friends and colleagues join the group because of me saying, you don't know what you don't know until you find out you didn't know it. And so, I brought some props with me today, and I know I'm about to get a new one of these.
Yeah.
When we have these meetings. And Ed, you might explain, you see how thick that book is. This is from actually October of 21.
It's our last virtual meeting.
Explain some of the stuff that's in a book like this. What are we doing while we're here for our
training
sessions?
You're learning all the latest tax rules that apply. And why is that important? If you're watching, you say, well, I have my 401k, my IRA. What's the big deal? The big deal is, why are you doing this? Why did you work 30, 40 years, save, build, invest, sacrifice, so you could have money for retirement? But that money is at risk. Tax risk. Remember, your IRAs and 401ks, I hate to say it, but it's a joint account with Uncle Sam.
Absolutely.
And unless you do something about it. And that's where advisors like Brad and the rest of our members of our Master Elite IRA Advisor Group take specialized training and help you getting that money out so you can have more. And I say this on every TV show I've ever done. Have more, keep more, and make it last. It doesn't matter how much you've accumulated. Right. Even in a good stock market, whatever the stock market gives you, Uncle Sam can take away.
Absolutely. So let's talk about that for a minute, because it may confuse a listener, even someone watching, when you say you're in a joint partnership with Uncle Sam.
How would you say it?
Well, I would, just like you've said many times, because I steal from you often, your IRA is an IOU to the IRS. Explain what that means.
Well, every time you took a deduction, that was the good stuff.
Right.
But a deduction for, say, an IRA, a 401k contribution, if you look at it, it's really just a loan that you got from the government that has to be paid back, plus earnings and then some at whatever the prevailing tax rates are. And that's another thing I'm worried about. Future higher tax rates making a big impact on your standard of living in retirement.
Absolutely. I think people will call into my show all the time, and we've had thousands of calls over the years. Arkansas, Missouri, Oklahoma, Kansas are our main states. But, of course, everyone comes to Branson to vacation, and now they come to Springfield to see the number one aquarium in the world. And so people will be here, and they'll hear me, and then I'll get calls from California and Tennessee and New Mexico and all over the place. And a person doesn't always understand, wait a second, I put this money into my 401k or my IRA, and maybe they've invested $100,000. And now, after 30 years, it's worth $250,000. And they don't realize how much of that's taxable, Ed.
All of it.
Every bit of it. Why? They only put in $100,000.
Because that money has never been taxed. The big thing that I always tell people when I do consumer programs, the first thing I start with is the difference between tax deferred and tax free. Tax defer means it's not tax free, obviously. Tax defer means you will pay tax on this at some point. The big difference, and it's a big difference depending on what the tax rate is, tax deferred and tax free, the difference comes down, that big difference comes down to one little 3-letter word, yet, Y-E-T. Tax deferred means you won't pay taxes on that money yet.
Very good.
But you will at some future date. Maybe you're at a higher rate and a higher balance, as opposed to tax-free, which means you'll never pay taxes on that money. So here's my always rule. Tax-free is always better. And the reason I call it an always rule, you know how some people, you go on TV or wherever, you see people talk about, they never want to, stake an opinion, a definitive opinion. Well, maybe, could be, probably, it depends. They're always wishy-washy. This is a non-negotiable rule. Tax-free is always better. Who could argue with that? You keep 100% of your money. In other words, to put it another way, you can remove Uncle Sam as a joint owner on your retirement savings.
Perfect. And we're going to delve into some of that. We're going to talk about your new public television show, your 4 retirement pillars. The people that are watching, if you're listening, of course, you're just going to hear me talking about this, but there's 2 books sitting in front of us. And here's one thing that happens when something like COVID happens and a world shutdown happens. Brad and Ed are bored. We don't have anything to do.
I'm never bored.
Because we can't travel to places, so we're going to write. So we have 2 new books. Your new book, but my book came out this last year, 2021. And actually, I was blessed to have you write the foreword for my book. And my first book, Safe Money Matters, Chapter 8 is tax-free beats taxable every day of the week. And basically, everything I write about.
And on Sunday.
And that's right. It's absolutely right. And so the reasons why a person would want to be moving their money from a tax-deferred account to a tax-free account is this. Who sets the future tax rate for those tax-deferred accounts?
Well, Congress. It depends on how much money they need, and they always need money. All this is really is a giant bet on where you think future tax rates are going.
Right.
I think they're going up. It's sorry to say, due to a 4-letter word. Can I say that on
Let's say it.
Math? M-A-T. No, you thought I was going to say kids, right?
Yeah,
that's a 4-letter word too. But where's the investment there? I mean, there's no return there. You know what I mean?
Right.
I mean, it used to be the American dream was owning your own home. Now it's getting the kids out of it. No, it's math. Look at the math. At this point, there's just no way they can cut your taxes. Plus, you look at the history of tax rates, which I know you have.
Yes.
We're in the lowest tax rates anyone has ever seen in their lifetime. What is the likelihood of taxes going lower in the face of our deficit and debt level?
$30 trillion in debt says probably not going backwards to a lower tax bracket.
Right. So there's 2 ways to say it. Do I think tax rates are going up? Yes, but even if they don't, there's no way they're going down.
Right. Well, whether you're listening or watching, want to just throw out a phone number so you can know this. You can always call in 866-780-SAFE. That's 866-780-7233. We answer the phones 24 hours a day, 7 days a week. And if you would like to read a copy of my book, Bulletproof, the Safe and Secure Retirement Income Plan, with foreword by Ed Slott, or if you would like to read Ed's new book, which I'm going to ask him about his book, just call in. I'll give you a copy of both books absolutely free. We want to match consumers with the correct information. So much of the time, and I know Ed will talk about this, you have advisors, financial planners, financial experts. They're really good at getting your money into accounts. they're not very trained at getting the money back out of the accounts. A lot of times they'll even say, hey, that's not my job. My job's to make you money. You need to go talk to your CPA about that. But what we really focus on is not only setting up the right type of accounts for our clients, but making sure we're helping them get the money back out of those accounts in the most tax efficient manner.
Right. It's not, when you have a retirement account, it's not what you accumulate, it's what you keep that counts after taxes. You can't spend what you lose to taxes.
Absolutely. And what is the number one thing that will separate someone from the retirement of their dreams?
Taxes. There's no question.
Very good.
And it's future taxes, so it's an unknown. That's what I'm most worried about, the uncertainty of taxes in the future. Taxes are the single biggest factor that will separate people from their financial dreams in retirement.
I wish we had time to go into my own personal situation from this year, my own tax situation, but I nearly had a stroke when I found out what I owed this year. and part of that involved a mess with someone stealing my identity and filing a fictitious return and having to fight that and getting all these nasty letters from the IRS and saying I owed money I didn't owe.
Well, the good news is people want to be you.
That's it. That's right. But definitely they don't want my tax bill. That's for sure. So everything I can do to reduce that, get rid of Uncle Sam now, get the monkey off my back. I'll say a lot of times on Safe Money Radio, if you have $100,000 in your account and I have $100,000 in my account, who has more money? And people will say, well, that's a trick question. It's the same amount of money. Well, I didn't tell you one thing. Your money's in an IRA. And my money's in a Roth IRA.
Right. Who has worth money? Double.
yeah, it could be worth double.
Yeah.
And we just go through the simple math of showing what the distributions would be, the possible tax rates would be, whereas with the Roth, you keep it all.
Right.
And it doesn't affect your Medicare taxation or your health care premiums or any of that, which it will if it's coming from a tax-deferred account.
But you have to take the long view. You have to look big picture. The point is you want to have more when you'll need it most for the rest of your life, long term, and even beyond as a legacy to your beneficiaries.
Absolutely. So let's do this, Ed. Let's jump into the new show that you have on public television. How many shows have you done?
You know, I lost count. I think 7 or 8. I'm not sure.
Sure.
Because we've done, somewhere around there.
Okay.
Over about 15 years.
Yeah, 15 years on public television, educating people about retirement planning. That's why I say this is the guru, the GOAT, the number one person when it comes to tax-deferred retirement planning, tax savings. It's Ed, which is why they call him the America's IRA expert.
Well, let me tell you something about public television. They don't keep a show on there if it doesn't do well. They don't like, just because I'm doing taxes. What they call a successful show is one that brings in donations so they can fund the mission of public television, which is lifelong learning, education, those types of shows. I could be doing juggling. If that brought in money, they would say, that's a great show.
Yeah.
But so they have lots of shows that come in. Maybe they run a week. Maybe they don't even get on public television. If they don't resonate with the audience, they're out. So to have a show on for 15 years, or many shows for 15 years, shows it's resonating. The message is resonating with people approaching retirement or already there because they hear my message and they say, you know what? I want to keep more of my hard-earned money. I don't want it all going to the government. That's why I call my new book, The New Retirement Savings Time Bomb. It's the taxes that will take big chunks, not bites, chunks out of your retirement savings if you don't have a plan. So that's the key to my latest public television show, which is called Ed Slott's Retirement Freedom.
Retirement Freedom, perfect. And you said something there, a tax time bomb.
Yeah.
And of course, in my book, I actually share a personal story about having a brain tumor, which
right.
I did back in 1999. Thank God, 23 years removed from that and everything's okay. But there was a tumor in my brain that was way too large. You saw the pictures. If anyone's read my book, you've seen the picture. And that tumor had to be removed. There was a problem there. When you have a tax time bomb.
All right, this is a segue.
It is. What have you got there? You've got an IRA. What's the time bomb?
It's the taxes. You call it a tumor. It's a tumor. You could say you have malignant IRA.
That's it. It's got to come out. And even if you don't want it to come out, I could have said no.
Well, that's the thing. There's no choice
with
the taxes, just like you had no choice. the taxes will have to be paid. It's not if, but when. So many people say, well, I'll put it off. If you do that, you get what I call, and you know what I'm going to say, the government plan. You don't want the government plan. You want your plan, not the government plan. Because, and when I say that in seminars, people always come up and say, or they'll ask me, they'll say, Ed, I don't understand. What's the government plan? I say, oh, that's easy. You just sit back and do nothing and let the government take whatever they need.
That's it. Because if a person passes, they have a large IRA, and no one in their family has been trained, they don't have the right advice, Uncle Sam has rules for every person.
Right.
And we learned that with the Secure Act, and we're continuing to learn what a non-spouse beneficiary is, what an eligible designated beneficiary is. All these different how old are you if you're a sibling, 10 years younger?
Yeah, right. Oh, so many rules.
All the rules. And the bottom line is Uncle Sam hopes you don't know, so he can reach in, just like you said, and say, I'm going to take out as much of that as I want, and it's all coming to me.
Right.
And that's what we're trying to stop consumers from experiencing, showing them how to take the money out in the most tax-efficient manner. So Freedom From, the new show.
Oh, there's
Retirement Freedom.
It's based on my 4 pillars of retirement freedom, things that I see go wrong for years and years. First pillar is freedom. You want freedom. Freedom, that's why I call it retirement freedom. Freedom from taxes. Freedom from worry. It's the pandemic just exacerbated that, but it was always there, the worry, the anxiety. What happens when I'll be in retirement? Well, I have to worry about running out of money. Freedom from risk, the stock market risk. It goes up and down. Now it goes up and down 500 points, 1,000 every day, and people don't know what to do. There's no way to go through retirement. But the fourth freedom, so the first 3 freedoms, freedom from taxes, these are things you want, and you probably don't have because it hasn't been addressed by an advisor who, like Brad, who's trained. And Brad's been training with us. That's why I created Ed Slott's Master Elite IRA Advisor Group, who have this specialized knowledge to help you keep more of your hard-earned money. So you want freedom from taxes. You want freedom from worry. You want to put your head on the pillow and sleep at night without worrying about these things. Right. You want freedom from risk. You don't want to wake up and say, well, I don't have enough money for retirement because the stock market's down.
Right.
And longevity risks too, running out of money. Number one fear in America, living too long, running out of money. But the fourth freedom I put in there is probably the most critical. Freedom from bad advice.
So I'm sure you hear some pretty amazing stories about things that happen that involve bad advice.
I'm hearing worse now.
Okay, so give us an idea. What's some bad advice?
And that's what gave me the idea for the show.
Okay.
I TikTok videos. I got to tell you, there's stuff all over the internet. I just had a story where somebody bet their whole retirement savings on some advice they got on TikTok. Well, now I got a call from an advisor who got a lawyer. I mean, once lawyers start calling me, it's probably not fixable. So I don't even know these people, but I'm hearing they go on and there are people giving all kinds of advice. They're not accountable for the advice they give. Even some of them are financial advisors and they sound very compelling. They tell you do this, do that, but they don't know the rules themselves. That's why I created this group, Ed Slott's Elite IRA Advisor Group, which you've been a long-time member, many years. That's why I was proud to write the foreword for your book, Bulletproof, as you could see there, because I know you're one of the few advisors in the country that takes this stuff seriously. You dig in, you get yourself educated so you can maneuver the rules. Plus, you have us as a back office.
I would have to say, just this week, typical week, we're getting ready to leave town and do all this stuff, and I had to email Andy Ives 3 times this week and say, okay, Andy, I don't know why I'm getting all these situations, but it's 3 things I've never come across. And he's like, I love it when we get these things we've never come across. And having book, chapter, and verse with our back office, our back team. With
you said my team of IRA experts, but here's the difference. An advisor like you that's been trained, going through our training, and this is not like one seminar. That's another thing. People have all this alphabet soup after their name. This is why I say freedom from bad advice. And they took a 30-minute online course. I'm talking about, the training you do with us is all year long. We have massive workshops a couple of times a year, but you're alerted to tax rulings, tax law changes, any major changes in anything. You get those elite alerts immediately. We have
all the time
webinars. So you're constantly in the loop. So the bottom line is, you know what to question. You know what you don't know. That's the difference. insurance. Most people have advisors that are dangerous because they don't know that they don't know. That's dangerous. You only have one chance. I always say your IRA is like an eggshell. You break it, it's over. These rules are not only complex, but unforgiving. You don't get a lot of second chances in taxes.
So, Ed, let me give a real quick example. You'll enjoy this. I haven't told you this yet, but for time's sake, I'll keep it short. I had a call from a pastor. He has a 403B. And as all of our listeners right now, it can be so confusing. There's 401ks, IRAs, Roth IRAs, 403Bs, TSPs, 457s, 401As, all these different classifications. He has a 403B. 73 years old. So we know he's above the required minimum distribution age, but he's still working.
Right.
So there's a still working exception, which a lot of people don't know about. Here's the thing. Earlier in the year, this was in 2021, he decided to do an in-service withdrawal, which I talk about in my book, roll part of his money out of risk into safety and roll it over to an IRA. And then when 2022 rolled around, we're in February, he emails me and says, "Hey, Brad, just wanted to let you know I retired in 2021. And I thought, uh-oh, because I've got all these rules in my brain. And I said, "What day?" He said, "I retired on December 31st at 5 p.m.
Couldn't he wait a day?
He should have waited one day. And most advisors and most of you listening right now say, "What's the big deal?" It's a big deal, and here's why. When he retired above the age of 72, the required minimum distribution, the first dollars out of his plan, which happened back in July, that was considered the first dollars.
RMD, yeah. Only a well-trained advisor would know that because we've drummed that into you.
It's retroactive. So even though he retired on December 31, they look back to July, and now he has an excess contribution in an IRA because the RMD came out first. And so, long story short, we were able to get his retirement date changed to January the 1st. It solved all kinds of problems that we would have been in a total mess. Thankfully, Andy said, "You should ask a special question and see if they'll change his retirement date one day." Yeah. It's a big deal, and it solved all kinds of problems. But guess what? If you're not trained and you don't know that,
you saved them a fortune.
Yeah, you're like, okay, no big deal.
Because that's an ineligible rollover.
Absolutely.
And an excess contribution and penalties.
Yes. So that's why I will often say, I know I've referred to it, your book, your new book is absolutely a Bible. That's why we want to give it to everyone who calls in. We want to give them a copy of the book.
Not only is it a Bible, but it'll take you to the promised land, tax-free.
It will. There you go. How to get rid of the tax man, get him off your back. I say this to people all the time. Of course, being a master elite, we've been in the group for a long time. We have 2 books.
Yeah, you go through, right.
And so I've got about 18 of these from not only all the years, but also the 2-day exams that I go to.
Yeah.
Explain why we have court cases in these books.
Oh, okay. You know this saying, learn from people, you learn from people's mistakes?
Sure.
Oh, no, I think the saying is learn from your mistakes. I always thought that was a dumb saying. Isn't it cheaper to learn from other people's mistakes?
Absolutely.
A lot less expensive.
Yes.
This is what happens. People make terrible mistakes where they, in many cases, have you seen by training with us and going through these case studies, these are real people, things that happen to real people. And every now and then when we go through some of the court cases in the group, somebody knows the person.
Right.
They're real people that made horrible mistakes. They got terrible advice. They owe a fortune. So as a last-ditch effort, they go to court like a Hail Mary, a tax Hail Mary. And sometimes they still lose. We teach all of our advisors like you about these court cases, private letter rulings, revenue rulings, a lot of things. All these terms I'm saying may be under the radar for most people, but people have lost their life savings. So we teach you what happened in these cases so it will never happen on your watch. So your antennas are up, just like the story you just told. Sure. Like you knew how to fix that because you knew what would happen. You saw down the road. So it's more likely people working with you will never end up in a court case. And one of the things, the worst thing with a court case, it's like that, I forget the show, was it Cheers? The theme song was Everybody Knows Your Name.
Right.
Is that the one that has
that?
That's it.
That's Cheers.
Yeah. That's what happens when you go to court. These are real people. We tell everybody knows their name. Oh, look at that guy. Boy, he'd messed up.
And to give people an example, you said private letter ruling, a PLR.
Yeah.
Are those free?
No, they cost tens of thousands of dollars.
And you hire attorneys, you have private
and
letter
sometimes
ruling
you
fees.
lose anyway.
Yeah, and because part of it, this is perfect for what you're saying. Your freedom from taxes, freedom from worry.
Freedom from risk. Freedom from bad advice. The reason I threw that in is because I think it is so critical. You've gone Imagine a football game. You've gone all the way down. You started with the ball at the, in your end zone, right? Or, at the 1 yard line. You go down 90 yards. And then you blow it. You ever see these games where they go across the field and they just need one more little 5-yard run or something, and they win? Yeah. And it gets intercepted or something.
Right.
That's what happens. You can taste the finish line of a tax-free retirement where you keep your money, but then there's a mistake, and these mistakes are often irrevocable, unfixable, unless you have an advisor that can, number one, help you avoid it in the first place. And as you said, sometimes they can be fixed with the right maneuvering, but you'd have to have the knowledge to maneuver through the system like you did with that fellow.
Perfect. Sorry, Seattle Seahawks fans. The Super Bowl 1 yard line, everyone knew they were going to win the game.
Right,
and
exactly.
They pass the ball and throw an interception and lose the Super Bowl.
And you know who did it?
Who did it?
The butler did it.
That's right. The butler's the one that intercepted the ball. So you don't want that in your retirement plan. You get all the way to.
That's a good one.
That's the key here. The majority of people listening right now or watching, I know from all my years, it's age 55 to 65. It's people who are pre-retirees and retirees. They're major focused on taxes, and they know it's not going to go down. They know it's got to go up. They're worried.
Let me stop you there, because one of the things people tell me when I do lots of consumer programs, and every time I say taxes are going to go up, and somebody will always ask me, but in retirement, shouldn't I be in a lower tax bracket?
Of course.
And that's a good question. And they say, but Ed, I don't have my wages. I had a nice big salary. I don't have that. So shouldn't my income be lower? No, it never happens, because the more you save, the more will have to come out in required minimum distributions. For years, I used to have this with my tax clients. They come in retired and they say, Ed, how is this possible? My income's higher than my best earnings years. If I knew that, I would have stopped working years ago.
Of course.
And they're in shock on how it can be that their income and their taxes are higher than when they were working. And there's a few reasons for that. A lot of the accumulated savings, a lifetime of savings, required minimum distributions. But another thing they forget to take into account, lack of deductions. They don't have children in school. They don't give as much maybe to charity. They don't have business related expenses. No mortgage.
Right.
So it's like pure income.
Right.
Plus, it's at risk of future higher taxes, too. Plus, another thing I write about in the book, which you know about because we've trained on it, the widow's penalty I talk about all the time. People don't think about that. They say, we'll be in a lower tax bracket. And I might look at the husband and say, maybe you will, but she won't.
Right, exactly. Yeah, so that's why the people look at me with the deer in the headlights 10 years down the road when I say, They'll call and say, why are my taxes higher now? And I'll say, You remember 10 years ago when we had this Roth IRA, Roth conversion discussion, and you didn't want to pay the tax then because it was going to cost $20,000 or $30,000? Well, now this is the result. You let it defer, and now Uncle Sam's saying, I want my part, and you've got to take it out. And if you don't, what's the penalty if you don't take the RMD?
50% of the amount you should have taken but didn't. So once you hit RMDs, which Roths don't have, this is why I love Roth. Once you hit RMDs, you're on the government plan. It's out of your control. That's why I focus on freedom, retirement freedom. And just so you know, and I say it on all my TV shows, I'm not anti-tax or anti-government or anything. I'm in the old Arthur Godfrey school, the old comedian. He used to say on TV, I think in the 50s, says, I'm proud to be an American paying taxes. The only thing is, I could be just as proud for half the money. How about you? That's all I'm saying.
That's it. That's perfect. All right, so let me ask this. We're going through all these freedom from taxes, worry, risk, and bad advice. Let's talk about risk for a minute, especially when it comes to retirees. Right now, it's crazy. When the last time we got together, the market went in a skid. It dropped 35%, historic time. It all came back really quick. And now we've started in a skid again. 1,000-point drops, 981, 810, 1,032. Crazy time. So I get up this morning. I'm an early riser like
you. It's like 500 down, something like that.
It's 6 straight weeks down for the Dow. It's 5 weeks down for the S&P, 5 weeks down for the NASDAQ. The NASDAQ's down 28% since its all-time high. The S&P 500 is down about 18% year to date. And then, of course, the lovely news with inflation, all that this morning, they just announced that today is the highest national average for a gallon of gasoline, $4.37. So you've got all these risks, all this up and down and fluctuation. What do you say to someone who's about to retire and they're looking at whether or not they should even have things at risk? What do you say?
Well, you want to reduce risk. And one of the things, matter of fact, you talked about the last time we were together live was just before the whole pandemic and before the March 2020, March, April, May, whenever that crash was, right,
Yes.
where it went down.
Right.
And what did I talk to the group about? I talked about guaranteed income with products like annuities, which I don't sell. You might say, oh, Ed, you must sell. No, I'm a tax advisor. I don't sell stocks, bonds, funds, insurance, annuities, none of that. But I did this for myself years ago, and I've been talking about for 20 years. It's been a focus on every one of my shows, not for everything, but everybody's situation is different. But I always told people, and if they listen to me like 2 years ago, I said, whatever your number is, and what do I mean by your number? Whatever the basic month, this is just my rule. People can have different rules for themselves, but my rule is whatever that number is, that's your basic monthly living expenses. Those are going to come in no matter what's going on in the market. You better have money for that. That should be funded with guaranteed income. That's something annuities can do. Sure. And I use that myself as a cushion, almost like a guardrail to cushion against downside risk. Yeah, I still have funds in the market.
Sure.
I'm not saying same thing with a Roth conversion. I'm not saying do everything in moderation, but you need balance. You can't have 100% exposure in the market, especially now. It's so volatile, and if you're coming into retirement, you don't have the years to recover. One of the other reasons that I did the show and that fourth pillar, freedom from bad advice.
Sure.
I put that in there because all the crazy going on the internet with bad advice and all these young people claiming they made millions in Bitcoin and all this stuff. And maybe some of them did, but I'll bet a lot of them lost money. But
Sure.
The difference is, they have a lot more time to recover. Oh, plus they also have parents that can bail them out.
And
You
leave
don't.
them money.
Yeah,
Right.
yeah.
Right.
So you have a shorter time horizon. You can't handle that kind of risk in your 70s and 80s. Right. We did this for my own mother when she was alive. It's the best thing that ever happened to her. I told you the story at that last program we did. And, some of her, now she wasn't affected because she moved a lot of the money from selling the house we grew up in. My dad died many years ago. And she had an advisor like you that saw, she was going to go a while. They used to call her like the Energizer Bunny. She was into her 90s and she needed income for life. And she had these annuities. To me, this is the best thing that ever happened to our family because she had financial security for the rest of her life. Those checks came in every month, no matter how old she got, no matter how sick she got, and no matter how the markets performed. She didn't care if the markets went up and down $1,000. She got those. I think she had 4 or 5 checks coming in every month. In fact, it meant so much to her. Even at the end, when she was in the hospital, she would call me up, Eddie, bring me my checks and my deposit slips. She loved feeling the checks and writing out the deposit slips. To her, that was financial security. Now, I'm going to tell you, I never said this before anywhere. Mom, I never went to the bank with those checks. I did them all mobile deposits.
Yes.
But I let her fill it out.
I just want to make sure I'm hearing you correctly because when it comes to bad advice, you hear a lot of famous people say annuities are terrible. You should never own an annuity.
Until you need guaranteed income coming in every month. But here's how my mother was good. And, what else was good? Now, my brother and sister, they're not financial people, so they don't even realize the gift she gave them of her own financial security. Here's another one of my rules. The greatest gift you can give your family is the gift of your own financial security. Nobody wants to be a burden to others. Or to put it another way, the best gift you can give to your children is to not move in with them.
Yeah, that's it. So, friends, you've heard me on radio for years say I own 6 annuities. I know that I will own more. They're a special type of annuities. They protect my balance. I get to participate some in the market, not in the downside. I have income riders on them that are going to protect me from a lot of things. But that's the whole key. That keeps me from worrying. That keeps me from having to deal with and navigate the risks of all this up and down in the market. because I own a lot of them in Roths, I've already taken
Me
care of
too.
the taxes. There you go.
Yeah.
And then the last one, of course, we're taking care of it every single day by making sure that we know the stuff no one else knows to stay away from the bad advice. So if you're listening, if you've enjoyed what you've heard today, just remember, you can go online to Amazon and buy either one of these books and spend $40, $20 a piece, or you can call us and we'll give them to you for free. And while supplies last, I will give you some that have been signed by Ed. He signed some books for us today. So Ed, we're super grateful for you being on the show with us today and for going over the importance of freedom. Everyone wants freedom. No one wants to be controlled by anyone or anything. And so financial freedom is one of the things that gives true peace of mind.
Right.
Not having to worry about taxes,
Worry, risk, and bad advice. That is the ultimate death knell for your retirement savings. There's just so much out there with all this internet stuff, and you don't know who to believe, and a lot of it is convincing.
Sure.
But you need people that know what they're doing. Same thing with all the crypto. There's advice everywhere, and it reminds me, it's something I'm giving you a preview what I'm going to share with the group.
Good.
You know who the 49ers are?
Sure.
The San Francisco 49ers,
Right.
not those guys.
Okay.
I'm talking about the real 49ers.
The Gold Rush
Right,
49ers?
the
Okay.
1849ers. That's
Okay.
where the San Francisco 49ers got their name. You know who made the money in the gold rush? Not the people going out for the gold, the people selling them the picks and shovels and tools and supplies. They made all the money. It's the same thing here with a lot of this crypto. All these companies like crypto.com. I don't even want to say the names. I don't know the names anyway. But they're all these people that are building the infrastructure and helping you lose your money. They make all the money, and you can't afford to lose money in retirement. Isn't that Warren Buffett's rule one?
Don't lose money.
And rule 2?
Don't forget rule number 1.
Right.
That's it. Well, perfect. So Ed, I appreciate your time and all the things you said. I want to piggyback on that last thought and leave this with people. I've heard you say, be very, very careful, and I heard it on the new show because I've already ordered the new DVDs from public television. They're sitting right over here. Be very careful. I mean, people are listening to me on the radio right now, listening to you. They trust us because they hear us on the radio. You might see a commercial on TV. You might see something on TikTok or on YouTube or whatever. And you say, don't put your retirement life savings into something you listen to for 30 seconds or a minute. Do some research. Make sure this person is legit. Find out who they've studied and trained under. So that's why we want to put this information in people's hands. Tell people your website where people can go.
IRAhelp.com, IRAHELP.com. If you look for Find an Advisor, you'll find people like Brad in the St. Louis area and all over the country. But most advisors don't have that level of specialization in the tax planning for retirement savings. That's the one item I always say. I think I said it here again. I'll say it again. Taxes are the single biggest factor that will separate you from your retirement dreams. Most financial advisors just don't have the training, and they don't know that they don't know. That's why, as a consumer advocate, which is what I've been, an educator and a consumer advocate, that's why I have the shows on public television for over 15 years. I'm on a mission to match consumers with competent, well-educated advisors who know how to navigate the tax rules so you can keep your hard-earned money. I want you to have more, keep more, and make it last.
Fantastic. So if you're listening, make sure that you go to IRAhelp.com or GuaranteedSafeMoney.com. You'll find Ed on the opening page and a special tab on my website for Ed and all of his material, which will link you straight to IRAhelp.com. And if you would like a copy of Ed's new retirement savings time bomb or Bulletproof, the Safe and Secure Retirement Income Plan, just give us a call at 866-780-SAFE, 866-780-7233. We'll get you a copy absolutely free. Ed,
Before we go off, let me shake your hand.
Absolutely.
I am proud to be on this show with this man who has dedicated his life to education. That's why I'm here. You're doing a great job, and you can't even imagine probably the families that you made a difference on just knowing what you know and what you know other advisors don't know. So keep up the good work. Thanks.
Thanks so much.
Proud to be here with Brad.
Thank you.